Welcome to Barchart's series of educational webinars designed to enlighten you on a variety of investing and trading ideas. Today's session, Stock Signals Pros Trust. Now, every investor and trader has their own set of signals that they rely on for candidate selection. However, there is a crossroads where long-term investing and short-term swing trading intersect. After all, what is swing trading but simply capturing a piece of a primary trend? And long-term trend investing maximizes results by confirming momentum and market leadership. Two dynamically different timelines, yet both focus on the same principles of trend analysis. Strong trends persist, but momentum always fades eventually. Hello, everyone. My name is John Rowland. Happy New Year. On today's special webinar, I invited Jim Van Meerten, my friend and author of Barchart's Chart of the Day, to discuss this very premise: leadership, performance, and momentum. Now, although our timelines and goals are quite different, our tactics and process are quite similar. We're looking for repeatable, rule-based frameworks that identify strong trending candidates and disciplined risk management. And along the way today, Jim and I will share our custom views built to identify opportunities that match our specific timeframes, risk tolerance, and trading objectives. So stick around as we uncover Stock Signals Pros Trust. Now, before we get to that, please welcome our moderator and Barchart's project director, Gene Baker. Hello, Gene, and Happy New Year.
Yeah, Happy New Year to both of you gentlemen. I'm so glad to be back in the saddle doing webinars on Wednesdays.
Yeah, we were laughing a little bit beforehand. It seems like it's been a month, and you was like, yeah, it has been a month since we've been together. So
yeah.
Hopefully I'll remember how to do this.
So we're ready to get started.
Okay, Gene, let's do it then. Just a reminder that today's session is for educational purposes, and decisions to buy, sell, or hold or trade securities, commodities, or any investments involves risk and investment made on the advice of a qualified financial professional. And I will add that we will be looking at a lot of different stocks, and in our process, that these are not direct endorsement and merely just showing you and sharing you how our processes work. And under no circumstances shall we be liable for any losses or damage that you or anyone else incurs as a result of any trading or investment activity that you or anyone engages in based on any information or material you receive through barchart.com and our services. Okay, my guest has been a friend and colleague for 5 years, actively investing and trading for 5 decades, and is the author of the aforementioned Chart of the Day. Please welcome and Happy New Year to you, Jim Van Meerten.
Happy New Year.
How's it going, buddy?
Going great.
All right. Well, I invited you on because I thought what we could do is an interesting webinar based on kind of your process and your perspective, and then look at my process and my perspective. And I want to kind of just show folks that even though we're coming from two different angles, that there are a lot of similarities to how when you and I break down the markets, and that one or two or three of these inputs that we're going to look at are critical to our process. So the first question I ask for you is, how would you describe, or what would you say is a long-term investor's perspective?
The long-term investor's perspective is that what really counts is revenue, earnings, and cash flow. In the long run, those companies that have increasing revenue, earnings, and cash flow will increase in value, and those that have decreasing revenue, earnings, and cash flow will lower in value. So I'm looking at the fundamentals drive the price.
So fundamentals. So fundamentals tend to have an effect on technicals. So from a long-term trader's in perspective, from a technical standpoint, then I think things like, and stop me if I'm wrong, things like moving averages and a broader market is supportive to a long-term investor's perspective. Is that right?
Correct. In other words, the fundamentals are the cause, the effect is the technicals.
So again, when we start doing our process, we're going to look at benchmarks, and we could use, let's say, the benchmark of an index like the S&P. But then what we can also do is look at benchmarks, some analytics to help us decide if we like a particular candidate. And so our process, our analytical process works, maybe you and I are different, it works across different multiple time frames and different styles, but the starting point is relatively the same. And so the first part where we're going to start from is something called weighted alpha. And weighted alpha in both of our worlds really kind of tells us is a market moving forward and sort of a velocity, or gives us a kind of a value that we can measure as a measuring stick, not only for an index, but as we're doing our investing or trading. This is a benchmark that we're going to try to beat, right?
Right.
So, okay, so I put up here the S&P Index 500, and we can see here the weighted alpha here is 21.5. But so if folks want to know what weighted alpha is, I've gone to the, I'm going to just show you folks where we're at. We're under the Learn section and under the Learn Technical Indicators. And if you scroll down there, it goes weighted alpha. And again, weighted alpha is an indicator that kind of measures stock has risen or fallen over the past 250 trading days. In other words, one trading year. And this is really the takeaway here is, first of all, it tells us how much a stock or index it has appreciated over this period, but it emphasizes or weighted over recent periods versus over a longer period. And a stock, and I think this is really the important part, a stock that has a positive weighted alpha is most likely to have price increase over that several month period, and stocks whose price has not changed in that period will have small or negative weighted alphas, and those stocks prices have dropped over that recent period. So in your world, how is important is weighted alpha?
Well, weighted alpha to me is the fact that it is weighted, so it tends to be more sensitive than just the performance over the last year. So that weighted in the front of the alpha is what tells me that it is going to be more sensitive, just as the 20-day moving average is more sensitive than the 100-day moving average.
So a weighted alpha, if I'm hearing you correctly, basically confirms to you momentum. In other words, what we're seeing in the short run, and that if we have a increasing weighted alpha, that is a good sign that you have positive momentum.
Very positive momentum, yes.
And then if we have decreasing alpha or a falling alpha, then that might be a signal that we have trend fatigue. And certainly if we start matching these up against, the other indexes or other individual equities.
Correct.
So go ahead.
And I remember, it's a time frame of 1 year. And for me, that means that's 4 quarterly reports. So that my background was accounting. So I'm looking at quarterly reports. And I think that the information in the last 4 quarterly reports, and of course, the annual report, is what is ultimately driving any particular stock.
So a weighted alpha that is rising or accelerating to you is kind of a belief based on quarterly reports, is that this is an acceleration that is related to market leadership as well, right?
Correct. In other words, it's probably going to be confirmed that the previous 2 quarterly reports were better than the 2 previous ones to that.
So if we're going to look at this from an interpretation standpoint, or what we believe in from an investing standpoint, this is really kind of telling us of sustainable leadership. Now, I'm going to look at weighted alpha from a swing trader's, a momentum trader's perspective as more of a timing, but also if I see a change in my weighted alpha, that also is going to give me this clue of maybe an exhaustion to a trend. So that brings me to the next input that I know that you use, and that is the 52-week performance. And how does this matter to you in terms of trend context, and how do the two of them relate to each other?
Because the 52-week performance is a snapshot between 2 periods, say January 1st and December 31st, where the weighted alpha, it has the current information is more heavily invested in it. So if the weighted alpha is higher than the 52-week, that means that we're having an acceleration of momentum. If the weighted alpha is below the 52-week performance, we're starting to decelerate. Not necessarily be negative, it's just that we're not having the acceleration we had previously.
So this could be a determinant in also risk management as well, besides a determinant in let's say when we look at individual stocks. If I'm not beating the benchmark, then that's probably not a stock that in your world is that you're going to invest in.
Correct, yes.
So let's reiterate here. So a strong 52-week performance plus a rising alpha confirms trend. And what we're really talking about here is a primary trend. So strong performance and let's say a weakening alpha, a weighted alpha, would be that momentum risk or that change in what you said is kind of a price acceleration, correct?
Right. It's still positive, but not as positive as it was previously.
Right. So we're looking at here in the S&P, we saw our weighted alpha was like in the mid 20s, and you can see the 52-week performance is 17%. So in your world as a long-term investor, the S&P is still performing. It's still moving in a positive momentum, and it's still in terms of actionable, is still a potential investing candidate.
Correct.
Okay. So when we talk about momentum, then we could talk about a number of a variety of components. And I think some of the ones that you would agree with, or the ones that I know that you talk about, is number of highs that are being made over a certain period of time, maybe on a dailies or on a weekly, or if we look at, let's say, moving averages, we want to make sure that our moving averages are upsloping and supportive. So let's go to the S&P here. And I think I have this already loaded up. So again, we saw that our weighted alpha and our percentage gain, the weighted alpha is a little bit higher, but they're relatively close to each other. And you can kind of see this in our chart here, is that our momentum is still positive to the upside here, but maybe not as fast or not as accelerated as we see it was down here. But if we look at for other indicators, in this case, moving average here, what I like to see, and I think this is what you like to see as well, is that we have an upsloping moving averages, and I have four different moving averages. The red is the 20-day moving average, the blue is the 50, purple is the 100, and the black is the 200. And so what we can see here is not only do we see upsloping moving averages, but we see the short is above the intermediate is above the long term, and this is what we call stacking. And again, this is another positive sign of very strong momentum. So let's do this, Jim. So we see an expanding momentum here. So we can look at other things that'll help us in this process. And I think one of the ones that we will look at, and I know this is part of your process, is I'm going to go back to the price overview, and this is called the Barchart technical indicator. And this really is a proprietary design from Barchart, where we look at 13 different technical indicators. And what we can see here is we see a strong buy, and in other words, that all 13 indicators, 100% of them, are signaling, or the common interpretation is that they are positive, or in other words, positive momentum. And we can open up that, and we can see that this has been very consistent, and there are the 13 different common technical indicators that we're going to use to create this overall bar chart opinion. So how important is bar chart opinion in your process?
In my process, it's very important. Again, I want to emphasize that this is not a mathematical opinion. In other words, we don't take just the 13, it's heavily weighted. So the current short-term indicators have a higher weighting value than the medium or the long term. So this again is weighted, just like our weighted alpha is, to me, is more valuable than just the straight 52-week performance. In here, when we look at it, we want to look at not only the current short-term indicators are more important than the long-term indicators.
So short to intermediate to you, again, this is what I want folks to understand, is what you're saying is that short to intermediate is more important to you, but really what you're talking about is momentum. And what somebody who's a long-term investor might think, well, it would be more important to me would be a long-term, but it's much more actionable to you, this idea that short-term momentum is important for you, because a change in trend is going to come in the short term before it comes to the long term, right?
Right, just exactly right.
So strong performance on the technical aspect, right? Alpha, 52-week performance, and then we can see here are our technical indicators. They all align together. That would be a very strong sign, of a really strong performance or a primary trend. But if we see, let's say, a strong performance and a weak technical opinion, then that could be a warning sign to us. So here's the S&P, what we did, but I'm going to kind of go to NVIDIA. So we all know that NVIDIA has been, one of the stocks that has been really driving the market as of the last, year and a half, maybe probably more like 2 years. And what we can see here is, of recent, just the last couple of days, we do see a strong technical opinion, but, a month ago or a week ago, this technical opinion would have been a lot weaker. So even though this stock might have had a strong alpha, which you can see here is 45, that was well above the S&P, the technicals on this one are now telling you that maybe momentum is waning or momentum is fading. And how would you assess, let's say, an NVIDIA in terms of your world?
Well, on a long term, I'm not sure that this is a good entry point for NVIDIA. It's definitely a good hold point for NVIDIA, but if I don't know that I'd be committing new money to NVIDIA. I think that there's other stocks that with stronger technicals that would be better for my new money to be invested. Go back to that screen, John, and you can see that what you've got on the bar chart opinion was that we got a red signal.
On the Barchart opinions for NVIDIA.
Yes. So when I look there and I see a red signal there, and notice it's a short-term red signal. So that's, if I didn't see that, I'd say, yeah, it's a good entry point. But what I'm looking at now is I've got a short-term sell signal. That to me is a caution there.
Right. It's not like you're going to jump out of NVIDIA if you've already long it. It's just telling you that at this point, in terms of risk management, you're not adding to the position, correct?
That's correct. And it's confirmed there. Look at that current strength arc that we've got there at the top. It's showing it's kind of neutral. So it's saying the strength's almost neutral there. Which way is it going to go? Is it going to get stronger? Is it going to get weaker? So
right.
that confirms what we saw there with that red cell.
And so this is what I did was I came in and I put in our templates. This is one of the templates that we use. And again, notice our moving averages here. You know, they're not stacked. And this is kind of what your point. Here's the 20-day moving average is below the 50-day moving average. Yeah, the 50 is above the 100 and both of them are above the 200. But they certainly, they're not up sloping, right? That is a pure sign that momentum has definitely in this one, right?
Correct.
Right.
And that's why I'm
Even
saying,
though of
I'd be
recent
holding
we
it,
can
but-
look at the S&P and compared to the S&P, it's still outperforming S&P just slightly.
Correct.
Go ahead. What were you going to say, Jim?
Would it be possible to go to my trend seeker chart to confirm what you've got on yours?
Yeah, let's do that for a second here. So under templates, folks, and you can go into where bar chart templates, Jim has designed a template for us that we can use. It's called our learn term stop. This is really for a little bit more for risk management. And so what is entailed in here is you have the turtle channels over a 50-day period, and then that's represented by these lines here. And then you have what is called our trend seeker, which is kind of a modified trend identifier, uses a lot of different inputs, but it basically is a really good tool to help us decide if we have a positive trend or a negative trend, and positive momentum or negative momentum. So go ahead and speak about the trend seeker in this example.
What this shows here is that since about, move it back about a week since the beginning of that last high point, we've been flat. We haven't hit any new highs. This thing isn't adding any new momentum to our portfolio. And that's what we're looking for, is we'd like every stock to be like Lake Wobegon, slightly above average. And so what it's shown is NVIDIA has hit a peak and has not broken through. That's almost, you might want to consider that to be a resistance line. And you can see it's dropped off of that peak, and it's not breaking up through it. And that's why I'm saying to commit new money, I want to see breaking through those resistance points, and it's not doing that right now.
Right.
So
you want
I
to
would be
see
holding
more
it.
like this, right?
Yeah. See, I'd be holding it because it's not going any lower, but it's not going any higher. So I wouldn't add new money to it. But if I owned it, I'd be holding it.
And just for clarification, here we can see the trend seeker, which is represented by the spots. Here we have spots above and below, and that is a hold signal. What you want to see is that price gets above, let's say, our red dots here, and creates this positive green trend seeker.
Correct. When I see that is when I'd be buying. When I see it flat, I'm maybe holding. And of course, if that was going down, I'd be getting out.
So let's look at another Mag 7, and I think this kind of reinforce what Jim is kind of saying. This is Microsoft, And again, Microsoft has been one of the more strong stocks for multiple years. But here again, what we can see is that our trend seeker is actually now signaling to us that we have a bit of a down momentum. And then this at this point could also be a sign for you that says, well, maybe what I'm going to do, this technical indicator is in contradiction of, let's say, our performance and our weighted alpha. So this might be a time for me to reduce my position size, but certainly to wait and actually maybe even heighten my risk parameters. And I think in your world, if Microsoft broke below this line here, which it did back in November, that would have probably been an indication for you to exit this position, correct?
Correct. I want to own the 10 best stocks that are adding momentum to my portfolio, and the whole is equal to the sum of the parts. So if I've got a part in my portfolio that is not adding any momentum to my portfolio, why am I holding it?
Exactly.
And Microsoft hasn't done that since all the way back in August, early August. It quit adding momentum to my portfolio.
So multiple signals that I'm not adding to my position, and actually probably multiple signals that you probably would have said, hey, it's time to rotate into something that's going to have a little bit of better performance than Microsoft. Not that you don't like Microsoft as a company, certainly earnings and things like that, but the market is telling you that there's probably better opportunities.
Right.
All right. So let's move on. We're going to look at Jim's custom views, and I think we'll start putting these pieces together. But before we get to that, so let me go to what I'm going to do is I wanted to do a couple screenings based on custom views. So I started here with the S&P 100. I just want to show folks that some of these tools that Jim and I have just mentioned, for instance, these are the default views that Barchart presents for you. Under the main view, you do get the weighted alpha. Under the technical, you do get the bar chart opinion, and under the performance, you can find that 52-week performance, right? So those are just default views, but we can create a custom view. So I wanted to kind of show you folks something, and this is what we said we were going to share with you. Is I'm going to go up into my tools, and over here it says bar chart custom views. Now, yes, I'm going to leave that. Okay. And so what these are supplementary views. These are not default views that Barchart presents for you, but these are ones that some of them that I've created. And again, you can see down here, this is Jim Van Meerten's Chart of the Day custom view. So what you could do is you could look at these to copy them and create them on your own subscription page. In other words, you could create your own custom views. And I just want to show folks, these are the inputs that are in Jim's custom view. Now, there are some cool little nuances here. First of all, I can sort by one of the critical inputs. And I think, Jim, it's fair to say that weighted alpha is one of your most important inputs. So we're going to sort by weighted alpha. And then we can also do this by descending or ascending order. So we are going to do this by descending, in other words, the highest to lowest. You might have some different inputs that you want to use. And again, under the categories, there are multiple technical as well as fundamental information that you can use. You can just type in a word or a sentence up here in the column to help you find those particular indicators, but you can see the ones that Jim used. Now, I want to also show you that if you go under the Learn page, under Barchart data fields, and you open that up, that'll take you to this page. Again, these are all those different categories, those filter inputs. You can, again, multiple ones to choose from. And you can open up on any one of those and select them. But what I wanted to show you about this one, which is kind of interesting, is, again, look at all these different fields you can use. So for instance, here's the overall opinion. That is one of the things that Jim does use and I use as well. So you can open this up, and not only do you can see what that filter is, a description of that filter, but you can also find that those filters can be used for not only custom views, but some of our stock screeners, our ETF screeners, our option screeners, and also custom alerts. So benefits of being a subscriber to Barchart is having access to all these inputs, and again, how you can use them. All right, so let's go back to S&P 100, and I'm going to open up, let's read. And let's open up Jim Van Meerten's chart of the day. So again, sorted by weighted alpha. But Jim, talk to us about what are your, let's say, your three most important, and then let's break each one of these down in terms of the purpose in your process.
Okay, what I'm looking for, of course, is I want to be above the average. And I think, John, you said that the S&P 100 had about a 21 weighted alpha, right?
Well, let's look at the S&P 100, right? We can go under our price overview, and we see the weighted alpha for the S&P 100 index is 23.68. Well, or we could just round that up and say 24, right?
All right. So what I want then is I want to know what stocks are above that. And so when I click the weighted alpha line, I can go ahead and sort it at the top of the column. This is just like an Excel spreadsheet. I can sort now by that, and I can see all those that are above that. And that would be the list that I'd want to look at.
And then the next input for you would probably be Barchart opinion, right?
Opinion, correct. Now remember, we can do this in one of two ways. You can either go ahead and sort using this view, or you can turn around and screen using these stocks. Either way. So I'm looking for a 100% Barchart opinion and something that's above 24 weighted alpha. Those are the stocks that would interest me.
And then looking at weighted alpha as it relates to the 52-week performance as well, right?
Correct, because then I'm seeing whether I'm having accelerating momentum or decelerating momentum.
So for instance, here we have CVS, where the weighted alpha is 56, but the 52-week performance is 76. So this would be, even though this has a 100% buy opinion, a strong weighted alpha that is greater than the index itself, this is kind of telling you that maybe CVS has either waned in its momentum, or maybe there are better candidates inside of the 100 for you, correct?
Right, and that is sort of confirmed by going to the 1 month number of new highs, noting that it's only made 5 out of the last 20 trading sessions. It's only increased in 5 of the 20. So that's
it's not
another
like
sign
it's a
that
stock you're going to get rid of if you own it. It's just telling you, hey, maybe there might be better candidates if I'm going to put new capital to work.
That's correct, yeah.
So we could sort by highs, and then if we do that, well, then we see a much different picture, don't we?
We do. And you can see that, of course, the one that's had the most new highs doesn't have what I'm looking for, but look at that second one. The, is that Merck?
Yes, Merck, yeah.
Okay, Merck, it's got everything I need. It's got 100% buy. It's 14 out of the last 20 trading sessions have been up. It's at 25, which means its weighted alpha is above what I was looking for. And then I go over to the 52-week column, and I see that the weighted alpha is higher than the 52-week performance. So I'd be looking at that stock more than I'd be looking at the first one.
because this one has, the opinion is still technically is not strong, and it's, let's say, the 100-day moving average, it's still below the 100-day moving average. The technicals are not lining up or aligning with, in this case, those very key inputs that you were looking for, the opinion.
Right. I'm looking for the strongest stock, the stock with the strongest momentum.
So from here, would you look at flip charts
Look,
and
that'd be
say,
a good
okay,
place
well,
to
we
go.
said Merck is one that you would be interested in?
It looks very good to me there on your, like you use candlesticks where I use the stacked moving averages, but it looks like this one is right now having current momentum.
Well, let's look at it.
Okay,
Well,
then you
here we
just
have
moved them in there.
stacked
And there they are.
moving average momentum. Well, very healthy. And this is a comparison to the S&P. Remember, we're in the S&P 100, but it is outperforming the S&P as well. Now we can also look at weighted alpha on this one. Let's say, let me change this to a regular chart, and I could go into indicators, standalone, and there's weighted alpha. And what we want to see is that our weighted alpha has been rising, right? And so that would be another confirmation, wouldn't it?
It would. And if you could also go to my template of the trend seeker template that I've got. And there you see we're making new highs. It's pushed through that resistance line and making new highs. So this would be an attractive stock for me to acquire at this point.
Very good. Okay, cool. All right. So let's just kind of talk about a couple of these inputs real quickly with you. Symbol, pretty obvious name of the stock. Industry. So you like this. You got this actually from me. You told me.
Yes, I did.
You like this because this is a way for you to know what industry or sector that these stocks in, so that you don't overweight or that you don't end up investing, let's say, all your stocks in, let's say, one basket, correct?
Correct.
So, like, I think right now a lot of if you look in the materials space, you got a lot of gold stocks, right? You don't want to have a whole basket.
Yeah, I think if you clicked on that to sort by industries right now, you'd see the banking stocks probably are. Okay, look at aerospace and banking stocks make up a vast majority of what's going up right now.
Right, a lot of strong candidates in that particular space.
Yeah, and I wouldn't want to own 10 banking stocks.
No, I wouldn't want to own 10 banking stocks either. Okay, so percentage change, not necessarily important for you on a, say, the day-to-day basis, but how would you use this for?
Entry points mainly. When I would look at that percentage change today and the 5-day percentage change, and that would tell me whether this is a good entry point or not.
So you're kind of like looking for outliers. You don't want to jump into the stock that's up, let's say, for instance, I don't know who's up big today. Okay, Intel is up 7%. You're probably not chasing Intel today, right?
Right. So I'm looking for increased momentum, but I'm not a dip buyer. I don't believe in waiting for a stock to dip to enter into it. I want a stock that is currently going up consistently. And again, if you look at that Intel, move over one column, it's only made 2 new highs in the past month. So it doesn't have consistent momentum. It had some current, but not consistent.
Right. And even though the weighted alpha and the percentage is still very strong compared to the S&P.
Yeah. So with only 2 new highs, it's hitting the flat point.
Trend seeker, again, you're only looking at stocks that have a buy signal. Barchart opinion, again, I think you reiterated that you're only looking at those that have 100%, correct?
Correct. Remember, now that Barchart opinion is a snapshot. So 2 stocks can both have 100, and one is actually declining where the other is increasing.
Awesome. And then 100-day moving average, you use this for, I'm going to guess, risk management maybe?
Basically risk management. Yeah. If I've got why do I want to have stocks that are trading below their 100-day moving average?
So for instance, here's Microsoft, right? We all know Microsoft's story. What is below the 100-day moving average? To you, this would have been a long time ago, would have probably been a signal, hey, there's probably better stocks out there for me to own, and Microsoft is not adding to your portfolio.
Right. It's not adding to upward momentum of my portfolio.
So we know weighted alpha. We talked about 50%, 52-week change, but talking to me about looking at stocks in terms of 52-week percentage highs.
Okay.
What this value does is tells us how close we are to that 52-week high.
Go ahead and sort that column.
Okay.
Now, what that's telling me is that FedEx is actually the closest to hitting a new high. Go ahead and let's hit the flip chart, and you can see what we're talking about here.
Wow, really nice looking stock, right?
Right. So that column helps tell me which stocks are closest to hitting a new high.
And you can see this 52-week high. So this would be an ideal candidate in the world of Jim Van Meerten, right? Outperforming the index, you're very close to making new highs, right? What your philosophy is like my philosophy, can't make new highs without taking out the old highs, right?
Correct. Yeah.
Okay, cool. All right. And then anything else besides just the obvious? I know a theory that you use is called the green light theory. Why don't you explain to us what that means in terms of, say, the 5-day change throughout, let's say, a 1, 3 month, and
Look
52.
at what you've got on the screen right now. Most of these stocks are green all the way across. Now, John, inverse the opinion line, the opinion. Go ahead and click on it. Resort the descending. And now look, these stocks all have red signals across there. So these are stocks that I wouldn't be into. When I've got all green across the board, I like those stocks. These stocks, there's no use. Just click on a chart of any of those and you'll see that they're not.
All right, let me change it again.
Okay.
And I jumped it so many times I got a little nervous. I think let's do this. There we go.
Okay, now hit the flip chart and you'll see, look at this. Go ahead and flip through, just flip through and you can see.
Yeah, a lot of downtrending stocks.
The ones that were above 100, we like to buy those. The ones that were below 100, we don't want to own those. The ones that
let's look at this example, and this is again red light, green light. Here's Pfizer, right? Has 100% buy. Again, this is kind of your point, right? You could have 100% buy technical indicators, but look at the performance over the last month, over the last 3 months, and over the last year. This would not be a good candidate for you, correct?
Correct, yeah. So, the red light, green light, that's what I like about Barchart. Everything's red and green, and that's easy for me to understand. It keeps it simple for this mind.
Okay, so let's go to my chart or my screener and more about momentum and swing. And you'll see that, again, my default by weighted alpha as well. And you can see there are some of the similar inputs that Jim uses. I do look at a 1 month percentage change, 3 month, and 6 months. Again, in my world, I think that stocks that outperform 1 month are going to outperform for 3 months. Those that have outperformed 3 months will outperform for 6 months. So that is that momentum idea. Again, percentage change for me, again, like Jim says, I'm not going to chase a market that has a big percentage change in one day. Again, I love to find strong momentum candidates. I do look at pullbacks as an opportunity. But then I have this input, 1 month. Now, Jim uses the number of highs in a month, but what I'm going to look here for is my stock getting close to my 1 month high? In other words, I'm looking for the market to continue that momentum at a monthly basis. Because if I could get a new high in a month, a 1 month period, it's more likely that I'm going to see more new highs in that month period. So I want to find those stocks that are relatively close to that 1 month high. Again, percentage from the high. Again, to Jim's point, I do like looking for those that have a smaller percentage, but I'm not afraid to, let's say, find a stock that might be, 3 or 4 or maybe even 5% away from a 52-week high, as long as it is very close to making a new 1 month high. Again, the trend seeker, again, I'm with Jim. I want to find those that only have buy signals. And then I use something that's called the average to range. And this really is kind of a volatility index for me. It tells me how much on any given day a particular stock can move up or down. It's not necessarily a directional indication. And so what I would like to do, for instance, let's see if I can give you a good example here. For instance, like here's GM. We say the current price is 81.80, and the new 1 month high is 83.68. So that's about what, $1.80 away, and my ATR here is $1.50. So that tells me that there's a high probability, if momentum is going to continue, that we'll probably see that new 1 month high within the next day or two. And then the second input here, in this case, is the percentage of the ATR versus the price. In other words, in this case, a $1.50 move of GM ATR is about 1.5%. Now, most stocks on any given day move up about 0.5 to 1.5%. And so again, the ATR is telling me that, within a realistic probability that I probably could get that new monthly high, within the next day. But I can also use this percentage as a risk assessment. In other words, if I'm going to enter into a trade, then I know that on a given day, how much risk that particular stock will have. For instance, like Palantir here, we can see it, its average true range is $7.50, and that's a 3.5% risk. So that might not be a good candidate for me today because of that greater risk. And so that's kind of where I'm using those. Relative strength, again, another momentum tool for me. Again, my sweet spot is I want to make sure that my relative strength is above 50%, but I really like to find those that are in that mid to upper 60. Again, I can look at a lot of these candidates, and these look like decent candidates to me. And then we'll look at something called Bollinger Bands. And Bollinger Bands, again, is another volatility measurement. And what's interesting about the way we do now offer you to look at Bollinger Bands is you can look at Bollinger Bands in terms of where price is located inside of that Bollinger Band. Now, normally what I want to see is I want to see price above the mid, in other words, the mean, but I don't want to see it outside of the upper bands. I want to see it getting close to it. So there's two examples here. First of all, Intel, you can see, is at 113. That's telling me it's above the upper band. Now, not necessarily is a bad thing, especially if my bands are starting to widen, but that would be a cautionary technical analysis for me. But we can see, let's say, Google here, where my RSI is relatively strong, above 60, but we're only at 91%. So what we might see in this case is, the stock price is rising. And we'll look at that in a second. And then here is my EMACD. And this is one of my favorite filters that I use. Now, this is not necessarily a no deal. In this case, I can see that Google is a sell. It just means that recent momentum is negative. What I might wait for is wait for this signal to turn positive or bullish to give me that permission to go long that trade. So let's look at that, and let's look at Google as that. Well, let's look at Intel first. And again, let's look at this from the lens of Bollinger Bands, right? Bollinger Bands are expanding, right? This could be a potential momentum candidate, but, you know, again, I get a little bit nervous when we're outside of the Bollinger Bands because probability says we're probably going to get a mean reversion. So this might be a mean reversion type candidate, but we can see our bands are just starting to turn out. So again, if I could get a new monthly high, that would be a much greater buy candidate. Here's that Google, right? And this is really what I want to look for. Narrow bands where we're starting to break out of our Bollinger Bands, and at the same time making those new monthly highs. This to me is a much stronger momentum candidate, and then I would look at momentum candidate type strategies, be it options, being outright longs or short. How do you like that, Jim?
I like it. I like it.
Okay. All right. So let's do this. I see a lot of questions, Jim. So let's take a couple questions, and then I want to look at a couple of different markets, and we'll just quickly do some sorting. So give me a second here, Jim and Gene. Any particular questions that are kind of consistent?
Yeah, so let me respond to a number of people have been asking me, do you need a premier membership to create Jim's custom view here? Can you screen on these? Can you set alerts on these metrics? So it's kind of a nuanced answer. A free user only gets one custom view, so you could technically save Jim's chart of the day view that John showed you in the Barchart custom views as your one custom view. But if you are a Premier or even a Barchart Plus member, Plus members get 10 views, Premier members get unlimited views. So you can really, you know, create multiple versions of Jim's custom view and then apply these views to your watch lists or your portfolios or other preferred bar chart pages. As far as setting alerts on these metrics, yeah, if you're a Premier member, you can set an alert on, you know, is the 10-day moving average above the 20-day moving average. So if you are not a Premier member, I really suggest that you try us out. We have a free 30-day trial. You're going to see for yourself how expansive the tools are and how much you can actually get out of it.
Yeah, I can't emphasize that more, Chief. There's a lot of these very individual filters that I use. For instance, the EMAC, we have a whole page that is designed around that one. So yeah, I think this is one of the benefits. All right, Jim, here's a couple questions for us. What would be the shortest meaningful time frame for a trade? And this is more for an options trade that weighted alpha would be useful for. I think, let me take this one, Jim. I think the weighted alpha, again, remember, weighted alpha is just a determinant or a benchmark for us. As long as I have positive weighted alpha and that weighted alpha is greater than whatever my benchmark is, be it an index or other stocks, right, then there's really no time limit, right, as long as that momentum continues. Here's a question about you're a long-term and you've decided a long-term investor and you've decided to enter into this momentum, and what happens if 6 months the momentum changes but the fundamentals are doing great? Would you sell, hold, or definitely do not buy more? I think you kind of answered this one, Jim, right?
Right. If the stock is declining, there has to be a reason why. It's either the fundamentals or some news out there. So news can cause short-term variations in any stock, whether it be a press release, one of the major advisory service upgrading it or downgrading it. So, depending on your time frame, what are you going to follow, the fundamentals or the current news of the day that's going to make little blurps and breezes in it? So,
but change in momentum would put you on a risk management process, which would say, hey, I might reduce my position, and then eventually, depending on how much that price change, might even exit that trade, because you just want to consistently outperform the market, right?
yeah. Now, I want to make a point right here. Both what John and I have brought to you are a bunch of technical things. That doesn't, your buy-sell decision shouldn't stop with what we've shown you. You have to do some due diligence. Go beyond this and find out there has been a change in the momentum, and I need to know why. Is it because it's the company isn't doing what it should be? Is it because of short-term tariffs? There's a reason for it, and don't buy it just because the technicals say buy. Do some additional due diligence. In my chart of the day, I give you 3 things to look at your due diligence. The first being, of course, the technicals, then the fundamentals, and then the investor sentiment, what all the advisory services are saying about it. That's the
And from
minimum.
my point of view, as long as that stock has momentum, I'm just trying to catch a piece of that momentum. So yeah, fundamentals are not that necessarily important for me. I don't even have the expertise to look at fundamentals. I let the experts do that. Price tells me that the market is saying, hey, those fundamentals are good. As I have positive momentum, I know that I have positive fundamentals.
On any given stock, on their stock page at the bottom left hand is the fundamentals all the way down to the bottom. You just click on that and you can see it. At a minimum, at least click on that before you hit the trigger.
Jim, is there a limited number of stocks that you hold?
The fewer stocks you hold, the more change you will have in your portfolio. But the advice I would give you is don't buy more stocks than you can monitor. If you've got 50 stocks, I hope you have a time to monitor those 50 stocks. You don't just buy something and put it away on a shelf. You've got to monitor it. So how many stocks can you monitor? I would say the best is somewhere between 5 and 25. Over 25, you're not getting much diversification. Under 25, under 5, you're putting all your eggs in one basket. But I would add that the largest fortunes in the world have been made by people who put their eggs all in one basket.
Well,
Bill Gates,
this is true.
The only guy that's made money by diversifying was Warren Buffett.
There is a theory that says that somewhere between 12 and 15 is kind of the ideal. It doesn't give you that single stock risk, and it doesn't dilute the performance of the having too many. So in my world, again, I kind of hold below 20 stocks, and I try to get in that 12 to 15 level. All right, so let's do this. So under stocks here, we have top 100. This page is weighted by weighted alpha, so we know going in that these are going to be high weighted alpha candidates. And let's look at your momentum here, and let's just look at a couple of these, because I think there's a couple of them in here that, again, not a recommendation, but there's a couple of that you have currently are looking at or either have a position in. Is that correct?
Correct. I'd go ahead and sort it by the trend seeker.
Trend seeker. Okay.
Okay. Now, those are the stocks I'd look at. Put the trend seeker the other way as to the sell. And go to the flip chart, and you can see why I'd be cautious about those stocks.
Loss of momentum, right? Remember, these are all high weighted alpha candidates. Loss of momentum. That is important to you, right?
Yes, what I really like, the reason I like the flip chart is these pages that we look at, it's data, snapshots, but I want to see the trend. And the easiest way for me to visualize a trend is to look at a chart. And
Right.
that chart tells me is the price increasing or decreasing. Very easy to understand.
So for instance, like SanDisk here, right, it's made 8 new highs in the month. You know, you've got a buy signal, you have 100% opinion, super strong weighted alpha. We don't have a 50-week performance. This was a spin-off from, I think, Western Digital earlier this year. But you can see over the 6-month or 3-month period is definitely way out performing, for instance, the S&P.
Click on the
correct?
1 week, the 1 month new highs.
1 week new highs. Okay.
Yeah, 1 month new highs. And you can see that there are stocks there that, again, if you go to the flip chart, and go ahead to take the first 5, and you can see you got some good momentum there.
Nice momentum. All right, let's look at from my world. Again, probably a lot of these I'd be afraid of a lot of large price movements in a short period of time. That's why I'd be cautious about looking at some of these that are way above their Bollinger Bands or have high RSIs. Again, probably what I'm going to be looking for is those candidates that are very close to a new month high and also maybe within a percentage or two of their all-time highs in terms of, and then again, I want to see that short-term momentum being positive versus, let's say, an intermediate, and that's what this one is. So let me see if I can see one, right? So here we can see HUS, it's at 1784, right? It's high here is 17,898, right? Its ATR is 77 cents. Now that represents a 3% risk to me, but it's only 2% away from its all-time high, and I'm assuming that is probably the same value. What scares me a little bit is that it's way outside the Bollinger Band, so it might not be a great candidate. But let's look at that. Yeah, big price movement today. So this one would be a high momentum trade. Looks like it's just broken out, but in terms of risk here, probably a little bit too much risk at the moment. Maybe I'll look for a little bit of a better entry on that. All right, so that's top stock 100s. This is what I want to kind of show folks is how my world now crosses over with Jim's world. So I'm going to come back in here under stocks, under performance. And we've looked at markets now from a longer term perspective, 1 year weighted alpha, 52-week performance, and we know, that that technology stocks and communication service stocks have been the leaders. But let's look at the leadership. Let's say since October, let's say 3 months ago. And what we see here is the leadership in the broader market is in the healthcare space. And so let's go and look at healthcare. And again, we could go and look at, our weighted alpha for healthcare is 18.65. So we know that's where we want to be above. We'll go and look at our components or our constituents. And again, let's look from Jim's point of view. And so let's look from those new 52-week, or excuse me, new monthly highs. And boy, remember we did this analysis earlier. Merck was one of the ones that rose to the top of your performance. I think that was in the S&P 100. But here we can see Merck jumps to the top as well in this particular space. So this would be a really good candidate in my world, but certainly this would be a great candidate in your world, right, Jim?
Correct, yeah.
So that would be, and then again, let's look at my, from my point, again, I think Merck is probably down here. There it is. My recent price is 108. My monthly new high would be 111, and I'm only about 2% away from a 52-week high. Not a lot of risk in terms of the ATR. Certainly a $2 movement is well within range. And notice that both my short-term intermediate momentum indicator and my Bollinger Bands here are both show to be positive momentum. So let's look at that. And let's go back to Merck. And from Jim's world to my world, here's that Bollinger Bands. Bollinger Bands are widening, right? Probably want to see a new high before I run into this momentum, but this certainly looks like a good candidate for positive momentum. All right, Jim. So let's kind of sum this up because we did go a little bit over today, but I think folks should appreciate what we've talked about. So outperforming stock analysis and this checklist and what Jim and I have both presented to you. Trend context, right, Jim? We want to see a primary trend, things like stacking our moving averages. What else would you add to trend context?
Well, again, the trend context, Barchart lets you customize. So it's what trends are you personally looking for? Just like, John, you looked at different trend indicators than I was looking at. And that's good. What I really like about Barchart is you get to pick out your favorite trends.
Weighted alpha assessment. Again, we want to make sure that we beat our benchmark, right? That whatever our benchmark is, be it an index, be it comparative to, for instance, other equities. Anything you want to add to that?
No, just comparing those two against each other is a good place to see whether or not you're having accelerating or decelerating momentum.
Comparing our weighted average to our 52-week performance, right? We want to see our alpha above, and then an alpha below our 52-week performance could be that waning of momentum or trend fatigue. Bar chart opinion, right? Again, the different technical aspects, short-term, intermediate, and long-term. But if we're looking for strong momentum, we want to see a candidate that are checking all of those boxes, right?
Correct. Yes.
Momentum conditions. Again, short-term, intermediate, have we seen changes in our technical opinion at those levels? We looked at trend seeker as a great way to change in momentum condition, but also some of those intermediate technical opinions. And then what Jim kind of said is, what makes custom views and the filters really important for us is that we can customize this based on, our needs, our timelines, and again, our risk parameters. Watch list and portfolio decisions. I think in this one, Jim, would be, I could be adding a stock to a particular watch list that I'm thinking about putting into my portfolio based on some of these signals or criterias, but also those that I might be putting into a hold basket, or those that I'm going to either add or reduce my exposure in terms of that portfolio decision. And I think you make a valid point on the portfolio decision, which is,
look at once you've decided that this is a good stock, do a little bit of due diligence on it before you hit the trigger.
And once you're in a stock, then what's the portfolio decision?
Then monitor it and make sure that it is adding value to your portfolio.
Awesome.
That old let your profits run, cut your losses.
And that would be that ongoing monitoring, due diligence, and market performance, right?
At least once a week, no less than once a week.
So again, the theory, we want to stay with that strong trend persists, and we want to be aware of momentum changes or fades. And this checklist that I showed you here will help you identify leadership is either strengthening or when risk is quietly increasing. Jim, thank you so much. Any last comments you want to make before we jump out of here?
Jean brought up something good in her questions, and this ongoing monitoring. One of the things you can use is alerts. So if you say, I would be considering selling this stock if it hit a certain condition, you can set that up in your alert field. So it will automatically tell you, and I believe you can set it up so it'll even send you an email. You don't have to even be on Barchart. It'll send you an alert at the end of the day that some of your stocks have hit a point where you might want to consider doing something about it.
I think Gene will tell you that you have to have a Premier subscription to do that. All right, next week, Jim, thank you so much. Next week's folks, we are going to build upon what we learned this week. I'm going to show you some of my favorite tools that I use, some of my filters. And again, I'm going to build upon a lot of things that we learned from Jim and what I look for. And I'm going to show you a lot of the cool tools and filters and technical ideas that we have on our page. So make sure you guys come and check us out. Jim, thanks so much. I appreciate your time and effort. Folks, until next time, best of health, manage your risk, and the good of all trading.